Today I want to talk about private mortgage insurance. It's commonly referred to as PMI. I want to talk about what it is, why it's necessary, and how do you get rid of it. So this is a video not only for potential home buyers, but also current homeowners. So PMI, what is it? It's a type of insurance that protects the lender, not you. So when you bought your home, if you put down less than 20%, chances are you're paying PMI. This enabled you to get the house for less than 20% down. Not everybody has that much money to put down, but when you're financing more than 80% of the value of the house, the lender is going to require it. So why is it necessary? Well, when a lender does finance more than 80% of the value of a house, they're taking on risk and they're having you as the borrower to insure against that risk in the event that you are to not be able to make your mortgage payments and they have to foreclose on the loan. So mortgage insurance, PMI, the cost of it typically ranges from 0.5% to 1% of the amount of the mortgage. Now let me pause there and say that this, what we're talking about, is for a conventional loan. For a FHA loan, you're going to pay something that's similar, but it's referred to as mortgage insurance premium, or MIP. And in order to pay for that, they require a one-time upfront payment of 1.75% of the loan, and then you'll, similar to PMI, you'll make monthly premium payments over the course of the life of the loan. The important difference to understand between PMI and MIP: with an FHA loan, you're going to pay MIP for the life of the loan. With a conventional loan, you can have it removed. And let's talk about how you can remove that. So for a conventional loan, you can request to have PMI removed once you have 20% equity in your home. This could be achieved by one of two ways: either by paying down your balance month after month, or if the value of your home has increased. And this is really why I wanted to talk to everybody today, is over the course of the last couple of years, the fair market value of properties nationwide has gone up substantially. Here locally, in the last 4 or 5 years, home prices have almost doubled. So if you took out a loan, if you bought a home 4 or 5 years ago, just by making your normal monthly mortgage payments on time, you're probably qualified to have your PMI removed. And this could save you a couple of $100s a month. So how do you go about removing it in that case? In order for you to look into this, it's important for you to understand what the fair market value of your home is today and know what your outstanding balance is on your mortgage. So here's what I'd like you to do. Take a look at your monthly statement that you get with your mortgage payment. And on there, it probably in the upper right-hand corner, it probably tells you what your outstanding balance is on your loan. Write down that number. And then you'll also have to know what the fair market value of your home is today. So once you're at that 80% mark, you can request from your lender to remove PMI. So in order to do this, what you're going to do is you're going to write a formal letter to whoever it is that's servicing your loan and request that PMI is removed. It may be helpful to include with that letter any supporting documents that you might have. Maybe a current copy of your most recent statement that shows exactly what your outstanding balance is as of the last statement. The next thing that will happen is the lender is going to want to verify the current value of your home. Probably the most reliable way for them to do that is to have an appraisal. Now, if this is the case and they do need to do an in-person appraisal, there's going to be a cost associated with that. I don't want to quote that service, but it'll probably be less than $1,000. And once they verify the value of the home and they see that you've paid off more than 20% of that value, you'll be able to have that removed. So even if you have to pay for the appraisal, that money is going to be recouped pretty quickly. And your monthly payment is going to go down for the rest of the time that you have that loan. So you're going to save yourself quite a bit of money month after month. And most people are looking for a little bit of extra cash every month anyway. So this would be a great way to do it. If you have any questions about how to do this, please reach out to me. And when it comes time to write that letter to request that your PMI is removed, if you need a sample letter, please reach out to me. I'd be happy to help with the wording of that as well. And as always, if you're in the Pocono Mountains and you're looking to either buy or sell a home, please reach out to me. I'd love to help you make your life easier.